Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, we are going to talk about NIO, which at the moment is crashing substantially, minus 6.20% at the moment. And we just had earnings, basically just some hours ago, and they were pretty great. So probably everyone is asking, why the hell is the stock crashing today? So I'm gonna try to explain that, and I'm gonna try to also tell you something that you should ask yourself, okay? And no one is really talking about this right now between the hype that there is in the stock market. And the only thing I ask you guys as always is please leave me an early like. It's very important for the channel and for the video itself, as you help me to reach more people. And subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so here we have NIO. It is currently at $43.4 and it's hitting right now the 11 moving average. So 11 period moving average, which has been rejected the price a couple of days ago and now is trying to break it. So for a move down, we are going to see whether the market will be able to be strong enough to push back the price once again. But why is the stock crashing? I mean, when we take a look at the earnings that they have just released, they were pretty great. They beat expectations, and we have quarterly total revenues of $666 million for NIO. And compared with the previous years and previous quarters, we have that deliveries, 12,200 cars, compared with the previous year of just 4,799, which basically it's almost 3 times more, and compared with the previous quarter Q2, 20% more, which is great and even better than Q1 when the pandemic hit. So we see that everything is in line with my model that I did in the previous video. So that valuation, go to check it out, my model about deliveries, which I was saying that we can expect NIO to deliver around 500,000 vehicles by the end of 2024. So this is pretty in line with that. We see that the margins as well, it was 14.5%. This is the vehicles margin. And the gross margin, that one, 12.9%. This once again is in line with the model I did. And this got better, way better, compared with the negative 12.1% in the third quarter of 2019, so 1 year ago. So that's very great once again. It means that NIO, they can reach profitability quicker than we think. So everything looks quite great in this earnings report. However, as we saw, the stock is literally going down as I speak, 7.20% today. Look at that, it's crazy. So why is that? What is happening? Now, I don't know if you saw it, but I did a warning video about Li Auto. And that was like 5 or 6 days ago. And then the stock just crashed after that video. Let's see, why do we have to be careful? What do you have to ask yourself right now? These are the deliveries. So if you go to see the previous video about NIO, where I said a reasonable price prediction for NIO, these are the deliveries that I said, and from the earnings report, I can see that we are in line with this model. So 500,000 vehicles by 2024, that would mean a growth from here to there of more than 10 times. But if they are pushed by the government, probably they will be able to build new factories and reach this huge objective in so short amount of time. So that's perfect. And then I went through the valuation. But today I'm really gonna show you a comparison with the biggest car manufacturer, which is Toyota Motors. Okay, so we are gonna try to see how the whole school is priced by the market and how these new electric vehicles companies are priced like pure tech stocks. So The real question to ask is, will this last? Will the market price electric vehicles companies as tech stocks forever, or it is just the hype? It is just something that is happening right now, but then the market will actually change his mind. So that's very important, and here is just to make you understand what I mean. Now, this is NIO. This is the old valuation that I did, and I say, look, the price to sales ratio at the moment, so the market is pricing NIO with a 7 price to sales ratio. So this is the hype, and this is what we got. I said, look, considering the hype that there is in the market, they are able to achieve 500,000 vehicles, and this is the average cost per vehicles. We have two scenarios over there. We can presume that NIO stock today is still undervalued, considering the hype in the market. However, and I also told you, look, be careful, because when we look at, for example, Toyota, this is not 7. This is just the hype. The actual of Toyota is 0.7. So, as you can see, it is very, very lower. It is not even comparable with this. So this is pure tech stocks area, okay, pure speculation. And this is how the actual industry of the motor vehicles is priced by the market overall. So to make you understand the things, I just put Toyota Motors here, just near NIO. And I say, well, let's presume the same idea of the market is gonna be the same for Toyota. What will be the price of Toyota today? Because if you don't know, if you think that this is a big number, 500,000 by 2024, Toyota Motors is the biggest car manufacturer in the world and is the one with the highest number of vehicles sold. Just the last year, so 2019, Toyota sold 10.74 million vehicles in just 1 year. So we go there and we have the 2020. So here is 2024. I said, well, let's see what will be the today's price for Toyota if the market will price Toyota the same as electric vehicles companies are priced right now. So the revenue for Toyota has been $275.3 billion, with a price to sales ratio is the same as NIO. We have that today Toyota should have a company market cap of 1.9 trillion, so bigger than Apple at the moment, bigger than Amazon. So probably now you're starting to understand what I mean. When we divide this capitalization with the shares outstanding, we get a today's fair price for Toyota with the same hype as the electric vehicles world. That should be $1,300 per share. Bear in mind that today's price of Toyota is way far away from this. And let's take a look. Here we have $142 per share, and the actual market capitalization for Toyota Motor is 196.7 billion, and this is the biggest car manufacturer in the world. So we can see that compared with the hype model, is very, very different. As I told you, the actual price to sales ratio for Toyota is 0.71. So the question, once again, what you should ask is, for how long will the market price NIO, Xpeng, Li Auto as tech stocks? Because now it is the kind of surprise, the innovation. Everyone is saying it will be the future. And I think that people were very excited also when the first car was invented by Ford, okay? But then you see how with the years and the times goes by, what today seems incredible, well, it becomes the new normality. And the market, in my opinion, but I don't know what's your opinion, just tell me down in the comment below. Everyone can have different opinions, and that's good. That's how the world should be. However, in my opinion, and these kind of stocks, these kind of hype and pricing will not last forever, and the market will eventually accept that electric vehicles, okay, are going to be the new normal. And then what? Why should you pay this when the normal car manufacturers are paid like this? So that should probably go down in the long term, at least. Now let's see actually the other valuation that I did, another comparison. This time we have the gross margins and net margins. So we saw that NIO from earnings is doing very great, so I think that they will reach profitability. So this actually makes sense. Once again, let's compare with Toyota. Now, this was 2024, the NIO scenario. I just put Toyota, the actual numbers, okay? So in that way, I kind of like presume that Toyota is gonna do the same numbers. So no growth at all for Toyota. This is what this model is saying, just to make you understand the comparison. So Toyota is a very disadvantaged way in this model compared to NIO, because here I presume a very strong growth and here zero growth. So the same as in 2020. But let's see what we get. We have a gross margin for Toyota. This is actual, 16.6%, while this one I estimated for NIO, 22%. And it can make sense compared to what we saw in the earnings. So going forward, 2024, that can make sense. Now, this is the same as the previous video. So if you really want to go through all the passages with it, go to see the previous video I did. However, we have that the gross profit for Toyota actual, this is real data, $49.75 billion. Net income for Toyota, $19.79 billion. The net margin for Toyota is 6.94%, and I've estimated a net margin for NIO in 2024 of 6.8%. So you see pretty similar in the scenario. The shares outstanding for NIO are 1 billion, and then Toyota 1 billion. What we get an earnings per shares of 1.28 compared with 14.14 for Toyota. So way higher than NIO. And now let's take a look, because I said, okay, electric vehicles are priced as tech stocks. So instead of taking a P ratio of 8.6, which is the actual P ratio of Toyota, and bear in mind the average P ratio of the car company, so the car sectors, is 7.6. So compared with these things, it's completely another world. However, this is how the market is pricing electric vehicles. So let's take a look. 35 to 70, we have that these are the actual fair prices for NIO. So with a 35, we have a price of 30.77 for NIO, while with a 70 P ratio, very speculative, we have a fair price today of 61.54. Comparing what the market is doing right now with NIO, we can presume that the market is pricing at a future P ratio between 45 and 50. Let's do the same for Toyota. So what would be the fair price today for Toyota if the market would price Toyota the same as NIO or electric vehicles in general? And we have a fair price, a price by 2024 and then discounted back, the same as NIO, the same as I did over there. And we have that with a 35P ratio, Toyota today should be at $341 per share. And then going to 70, which is the more speculative one, of $682 per share today for Toyota. Considering that today the market is pricing NIO at around 50P ratio, future, assuming the same for Toyota should be that today the price of Toyota would be this one, 487.2. But as we can see, things are very different from that. Look at that, 8.68 is the actual P ratio for Toyota, which is higher than the average in this sector. So why is NIO crashing today? Well, the real question is not that. The real question is, for how long will the market continue to price electric vehicles companies as tech companies? So this is the main question, and everyone can have different answers to this, because the P/E ratio is just made by humans. It's just what humans in the stock market expect from a company. This is just pure feeling. It's not numbers, not science. It's just what for me. I'm willing to pay 35. For another one, I'm willing to pay 10. For another one, I'm willing to pay 12. And then a guy next to me has different numbers and different ideas. And then the same for another guy. And so this is something that we have to keep in mind. For how long will the market continue to price with a price to sales ratio of 7 when the actual for Toyota is 0.7, and then with these kinds of P ratios when the actual P ratio for Toyota is 8.68. And now some can say that, okay, but NIO is not just a company which sells cars, but in my opinion, yes, it is. Just because they are selling electric vehicles, which are different from normal petrol vehicles, it doesn't mean that, I mean, their main revenues is from selling cars. So that was how they make money. And the fact that electricity instead of petrol, and that electricity will probably be the cars of the future, it doesn't change the fact that the business model is the business model of a company which manufactures and sells cars. So let's take a look at what it should be the price of NIO today if the P ratio was 10. What we have, fair price today of $8.79. So this is just a scenario where, and remember that the Toyota one is 8.68. So here is even higher than Toyota and 60% higher than the average, which is 7.5 for this sector. So P ratio of 10, 2024 price for NIO with this kind of delivery, so 500,000 deliveries, is 12.76. And discounted back today, 8.79. So when we see that today NIO stock price is going down a little bit, well, as I told you with Li Auto, we have to be careful because the hype behind these kind of stocks is so big right now. So if you buy the stock now, the real question that you should ask yourself is, will the market continue to price these stocks as tech stocks? So that's the main question you should ask yourself. If the answer for you is yes, then that's perfect. These stocks are still cheap. If the answer for you is yes. But if the answer for you is probably long-term no, then, well, you should be very, very careful because the price today is exaggerated compared with the real business behind the company. So that's it. Just remember the risks. In the short term, well, I think that the market can continue to price these companies with that high valuations because now it's all new at the hype moment. But I don't think that it is sustainable with a long-term perspective. Just pay attention to that, and this is what you should ask yourself before buying these kind of companies. So if you think it's a yes, then go on. Otherwise, be very careful. There are big risks, and I will not be surprised to have a market that realizes that this price can be exaggerated. So I hope you find this video interesting, guys, and leave me a like and leave me a comment below. Tell me, do you think that the market will continue to price these kind of companies as tech stocks, or will eventually lower the valuations, so with lower P/E ratios? Just leave me a comment down below and subscribe to the channel, and as always, guys, have a wonderful day.